of weather and price, and then Brian will take it over from there. And so, started off with June. Overall, the summer was just much weaker than we had anticipated. In June, warmest areas were in the far west, along the northern edge of the state as well, and in the southern triangle. Most of the coolest regions were clustered throughout central Texas. In the graph below, you can see the precipitation proved to be a lot drier in the southern half of the state. We were expecting a little bit wetter of a June, but it was just a lot drier than anticipated. The next graph here is the pricing and demand recap. The orange line is the real-time on-peak average. The blue line is the dam on-peak average, and the dotted line with the far right x-axis is peak demand. So each day, whatever the peak demand of each day for the month. This also includes all weekends as well. That's one thing we've got questions on in the past, but we do include it every day of the month. Some notable things here. Large drops in load throughout the month. Notable days, June 9th and the 22nd. Saw just much weaker demand than we've seen in a while. You can actually see the spikes in the downward spikes on the 9th, the 22nd, and the 25th. A lot of that was just mainly due to just little cold fronts moving in and out, and heavier precipitation. Overall, though, the month was mostly positive dart spreads. You only had 1 or 2 days where there was like a light premium in the real-time price. Peak load, we didn't really quite reach 60. We hit about 59 gigs in mid-June. But overall, the month was pretty uneventful. You can really see the real-time price really followed along with demand. It's kind of a good graph, not a lot of showing not a lot of volatility. Moving into July, overall much cooler than forecasted. Southern half of the state was near seasonal, but the northern and central regions were well below seasonal. As you can see in the graph here, temperatures were just a lot cooler in the north. If you look at the top right graph there. In the top left graph, heavy precipitation, a few days, well above normal in Dallas and north of Dallas. Just saw a lot of rain, and below average temps in July due to that rain. Moving into July 2014 pricing and demand recap. Graph, same thing as the June graph. Blue is the dam, orange is the real time. And a few days we did see a spike in real time, notably July 13th. July 13th, and the next day we saw a spike in the dam, the 14th. So you can kind of see the relationship there. As soon as we saw some volatility, everybody just did their units in differently and just cleared a much higher per dam price, and the real time was just pushed right back down to a positive dart spread. Demand did break 60 gigs a few times early in the month, but it didn't really get up to over 62 to 63 gigs until like the last third of the month. In general, really pretty much uneventful the whole month. Most days really strong positive dart spread. And again, you can kind of watch as you can see the price really follow along nicely with the demand shape throughout the month. Moving into August. August was the hottest month of the summer. Wasn't as hot as forecasted. Same as the rest of the summer. Above normal south, south central, and parts of western Texas. North central trended a bit cooler than anticipated, and a dry pattern really prevailed, except for parts of west and the extreme south. Really, it was just pretty dry and not very hot. Going into August, Pricing and demand recap. Started seeing dam premium. As soon as we started seeing the dam premium, started seeing a dam premium the first day that load approached the strongest demand days of the summer. Early in the month, around 6th or 7th, we started getting up to 64 gigs. The first time it got close to 65 gigs resulted in a really strong dam clear, which is August 7th. And once real time came in and it was clear that there was plenty of generation that was going to be available, the dam price fell down sharply the very next day. Minimal or negative dart spreads pretty much the rest of the month. And our peak load day was only 66.5 gigs. And it typically falls, in the past, it typically falls in the first or second week of August. But due to the cooler temps, we didn't see it until later in the month. The 25th was actually at 66.4, which we'll talk about on the next slide here. And just to kind of review and show some trends from the summer. Overall, it was just cooler and wetter than anticipated, and that really drove downside on overall load throughout June through August. It was the weakest demand in the past 4 summers, and as you can see, in 2011, days over 60 gigs, we had 63 days over. 2012, we had 38 days over 60 gigs, and in 2013, 40, and then this past summer, we only saw 36 days. Also, peak demand, we only hit 66.4, and in the past 4 years, that was the lowest demand peak for the summer, with the highest load being back in 2011 when we hit 68.4. And then just to talk a little bit about ORDC. ORDC implemented on June 1st. That also came with a raised price cap of 7,000 megawatts. And there was a lot of hype around this as it's a significant market change. But as demand weakness just hit all summer, we just didn't really see the load levels we had anticipated, and the lack of just volatility in the market in the real time. Made less of an impact than we had originally forecasted. Majority here, you can see majority of the hours that had an ORDC price adder were $1 or less, and that was actually what we did initially. When ORDC went live, we figured most of the year would be under $1, and that kind of just the way the study went, that was pretty much the results that we saw, but we did expect stronger ORDC throughout the summer months. On peak, the max on peak hourly price of online reserve price adder was $67.86, and that we'll actually talk about that on the next slide here, and why we saw such a high on peak hourly price adder at that time. And here was the largest adder day, was August 4th. And on this day, demand was tracking approximately 1,500 megawatts above forecast during hour inning 15. Both units at Oak Grove tripped offline. We lost 1,600 megawatts total. That drove a real-time 15-minute SPP price to $627, which included a $254 ORDC price adder. And hour inning 15 actually cleared at $239.42, and overall price adder for that hour was $67.86. So what this kind of showed us was basically you need a market event such as a large unit trip to really see a significant price adder. We had surplus or capacity numbers were still around what they like on the thinner side, probably around 4 gigs of surplus capacity, and And then as soon as you have a big market event, that's when you're going to not only get price volatility in just the lambda price, but also with the price adder. And with that, I'm going to hand it over to Brian Virtue, and he's going to just kind of go through the fall outlook. Thanks.
Okay, so the first slide here, we have a year-over-year look at temperatures, precipitation, and drought conditions for Texas. In the top left graph, you can see the departure from normal temperatures for the previous fall, which highlights the slightly cooler conditions for ERCOT. The top right graph shows the precipitation, also for the previous fall. The bottom two charts are Genscape's forecast for this fall's temperature and precipitation anomalies, which pretty much call for slightly warmer fall across the majority of the state in major load zones, as well as 25 to 50% wetter than normal conditions across the entire state. Peak load for fall was 64.4 on the 10th of September. It's I guess pretty much here what I have here. The two charts on the bottom left are year-over-year drought comparisons, and you can see this year compared to last year, we have a slightly weaker drought relative to last year. September's behind us. I'm just going to move into October. So as we head into October, we're expecting a more seasonal weather pattern, at least in terms of precipitation, for all of Texas except for the far west, where we're expecting above normal precipitation. We're also expecting normal temperatures across most of the state except for south central and coastal regions, which pretty much Austin, San Antonio, Houston are the major load zones there. See 1 to 2 degrees warmer than normal temperatures. Looks like that's probably, we're going to end up revising that, I would expect, with not as many warmer weather days expected in October. So last October, peak demand was 54.8, and for this year, it really depended on when we would see these above normal temperatures come in. If they were going to be close towards the beginning of the month, we'd have a few days above 50 gigs. But if they weren't present until later in the month, we probably wouldn't have any 50 gig load days. So the way it stands now, it looks like we're probably going to have 3 days in October over 50 gigs, with the peak being tomorrow. Thursday also looks to be over 50 gigs, but there's some storm risk. And then other than that, I think next Tuesday is the only other real arguably strong load day. Valmont should be somewhere in the 40 gig load range. So November, going to be a little cooler than average, with 1 to 2 degree cooler temps across the entire state, and also expected to have wetter, above normal precipitation, 25 to 50% wetter than normal. So this is a little different than last year, mainly in terms of precipitation. Last year, the peak reached 46.9 on November 25th, which was essentially heating load driven. The weakest load day was the beginning of the month at 32 gigs. So this November, we're expecting the peak to fall between 41.5 and 46.9, which will be driven by colder than normal stretch during the back half of the month. Okay, wind. So September is typically the lowest wind month of the year, and we see month-over-month increases both in October and November. We expect the capacity factor to increase. You can see the chart on the top left as capacity factor, for all ERCOT wind. So essentially, as we progress further through the fall, we have more large-scale storm. Showing capacity factors. Capacity factors remain relatively stable, about 31%. So really, any actual, any increase in wind is not due to increased capacity, but just based on actual total generation increasing with, more installed capacity. So this fall, with slightly warmer, warmer than average temps across, the mid part of the state. We were expecting a frequent stream of southerly winds in the west and stronger south winds. So, essentially the stronger wind in the south and west, which I'll tie that in with congestion, further towards the end of the presentation. Gen outlook. So for generation, we're expecting to have adequate resources for the load that's forecasted this fall, despite planned maintenance and forced outages. So this chart is taken from ERCOT's seasonal assessment of resource adequacy, which they publish. They look at the previous 3 years to determine 3 falls to determine an average typical maintenance outage and typical forced outages, of which ERCOT, on the seasonal assessment has 9,100 megs of typical maintenance, 3,400 of typical forced outages. And if you back that out of ERCOT's expected seasonal capacity, we end up with 62.6 gigs of capacity that's available, which is more than enough to meet future load needs. Now, whether that unit is online is a different story. Okay, so in terms of new units being added, we did have 3 units added in the summer. The Ferguson replacement unit, which is about 450 megs. Panda Temple and Panda Sherman, both about 800 meg units. Interesting thing about those, the Pandas, is that they can ramp, the quick start units, they can ramp to about half capacity in 30 minutes. Aside from those 3 units, we don't have any new thermal gen added for the fall, but we do have 1,300 megs of wind coming online. Earliest one I'm seeing here is this Saturday or Sunday the 5th. Otherwise, by about another month, we should have some more western wind. I think all those 4 wind farms are in the west. Tomorrow, October 1st, we have 3 large coal units that are going to be, seasonally mothballed: Monticello 1 and 2, and Martin Lake 3. So that's 2 gigs of coal, which pretty much that's been out last year. They've been going to mothball for the past few years. So really, I'd say the greatest difference year over year is the increase with the 3 CCs that have been added. And the only other major, major outage that we're seeing here is the Comanche Peak unit, expected to go into outage essentially this weekend, the 4th, 1,100 megs offline. I believe they typically go into outage, a nuke outage, anywhere from 4 to 6 weeks for refueling. So assuming they go off on the 4th of October, they'll probably looking to come back 2nd or 3rd week of November. Okay, so for congestion, there's a number of line outages already published on ERCOT's site for the October-November timeframe. So we've gone through and highlighted the riskiest outages that are currently published to identify areas of risk pretty much through the remainder, as far out as we can see these outages. So really for Houston, essentially for October, I'm expecting more of a basis spread between the load zone and hub, driven by some small line outages that move power into Texas City. So pretty much bullish Texas City risks. I think it's more of a dam constraint given the lower loads we're expecting in October. So I don't really expect to see any significant real-time congestion. Probably widest basis spreads in the dam during the peak hours for Houston. That's pretty much what I'm seeing. Some PHR outages, TNN Alvin to MDO. I don't think anything real significant in the real time. Now, that's pretty much October. Now, November, we have some lines going out. The larger lines: Singleton to Zenith, Singleton Tomball, Singleton Gibbons Creek. These are 345s that move power from the north into Houston. So take these lines out, as well as if you combine that with the stronger wind we're expecting in November. I think north to Houston congestion, which gives upside to both the hub and load zone, is more of a risk for November. And where we have less of a diurnal wind pattern, we could get some, there'll be some days in there with real strong wind transmission outages. And I think we'll see some Houston over north spreads, both dam and real time. So south zone, really, I think the takeaway here is that, you know, we definitely have basis spread in the south. We're seeing it now. South load zones clearing $50 over the hub in the midday hours. It's driven by an ongoing Rio Hondo to La Palma outage, driving Harlinger to Oleander in the dam in real time. We've only seen it hit 3 days in the real time, but only 2 of those with any significant, you know, any significant impact. Nonetheless, I think we're going to continue to see wide basis in the dam until this line returns from outage, which is mid-month October. However, we do have some more outages in the valley scheduled for November, which will likely you know, maintain this basis spread. And I also think we're going to see both bullish and bearish south load zone congestion, depending on what the wind farms in the valley are doing. So periods of strong wind, you know, assuming stronger wind in the overnight. You know, we'll see some bearish wind farms, you know, bearish wind farm congestion. It's pretty much what I have for the south. West, so as wind increases, I mean, some of these line outages here, we got Bluff Creek, China Grove, Sweetwater to Morgan Creek. These drive extremely bullish west load zone congestion, both dam and real time. I think these are probably going to be more, we're probably going to see wider basis spreads in the west in the day ahead than the real time, given the increase in wind, where the dam, the day ahead will still see congestion show due to these line outages, despite what wind is or is not, you know, whether it's there or not. But I think we really need some weak wind to see the west pop, essentially. So I think as we get closer to the end of the year, we should see the west basis tighten up. North, really no basis spreads, not expecting anything. I'd say the most notable outage I'm looking at here is the DC East tie line. Monticello to Welsh goes out. It's 500 meg tie line. You know, I'd say that's pretty much the equivalent of a 500 meg unit going into outage. So I don't think it's going to really drive any crazy congestion. You know, most of these other lines going out, Trinidad, Striker Creek, those are peaking units. I don't really see those units being in the money or dispatched, you know, with the 40 gig load days we're expecting in November and in October, and even, you know, some 30 gig load days in October or November. So really nothing in the north. It's pretty much what I have for congestion. So in summary, so the ORDC impact was minimal given the lower loads and ample generation we had. Peak demand for fall is behind us, 9/10 at 63.4, as is the lowest wind month behind us. We'll see, you know, month-over-month increases November and October and November. High west and south winds. The high west wind will decrease the basis spread. The strong south wind could drive some overnight congestion down in the valley. Current line outages, you know, ERCOT essentially got on their plate, have bullish, you know, basis spreads in Houston in the south. I think the widest basis spread I'm seeing through the fall is definitely in the south. We're seeing it now. I don't see that disappearing until the line outage comes back, which is, it's not out for the entirety of October, but a good chunk of it. So bullish West LZ pricing will continue. You know, it's essentially going to soften up as we progress month over month. So with less baseload units running this fall, wind and demand variations will play a greater role in the real time, but that's pretty much similar to not only last fall, but I'd say in general every day. And, you know, we'll continue to see more days with extremely tight positive dart spreads or negative dart spreads. And that's all we have. So if you guys have any questions, feel free to type them. Okay, so we will be we will be essentially emailing you a copy of the presentation and the PowerPoint and the recording from this, so you guys will have access to this after the meeting.